Well, hello everybody. This is Ron Wheeler, Manager of Options Trading here at VectorVest, and it's my delight to bring you tonight's special presentation, Managing a Winning Trade to Maximize Gains. And I've been trading now for 28 years, and one of the things that still to this day is really challenging for me is when do you take profits in a position? When should I adjust my stops? When should I take a little bit off the table? So what we've done is we've come up with a really good methodology that we use in our Successful Investor course that's going to help you have a mechanical process of when to adjust your stops, when to tighten things up if it looks like the market's going to go in the other direction, and then when to loosen that back out, all in an attempt to help you make the most money that you can. Now again, we can use things that are simple like the VectorVest stop, but what I want to do is tailor something specifically towards the market and how the stocks are moving. Now before I get into the example, what I want you to do, go into your VectorVest platform. I want you to click on Views, and I want you to click on Essays. And last week, Angela wrote a great essay, Find Your Best Stocks, back from February 14th. And just, if you're not familiar with it, just quickly review. Because she talked about VectorVest simple, keeping it simple, choosing high VST stocks, moving in the direction of the market with no resistance, high rising EPS. So this is essentially how we found the example that I'm going to walk you through tonight. So very quickly, if I go to Viewers, and I just go to my stock viewer. Here are the top VST stocks in order. Supermicro, Innodata. So if I just went ahead and graphed, I'm going to graph the top 10, let's say. Click on that, and we'll just graph the top 10. And in turn, we're going to go over to our graph layouts over here on the right-hand side, and I'm going to choose VectorVest Simple. RT, earnings per share. And then again, what I can also put on there, I can just go to add parameter. We're going to go to technical analysis, and I'll put on there support and resistance. So there may not be any stocks today that I can choose from, by the way, but this is the beauty of doing this in real time. What I'm looking for is a graph that's going from lower left to upper right. Good RT, good rising EPS. SMCI, while it's a high VST stock, may not be the best one right now. This one's a little bit better, INOD. It did move down a little bit today, or actually yesterday for, I don't know if that had earnings or something. It didn't look like it had earnings, but there's no dates on there. This is more of what I'd like to see. Rising earnings per share, RT very positive. Here's another example of BYDDY. Here's LRN, Stride Inc. And it's loading that up real quick here, so give it a second. So there's LRN, again, rising EPS. RT looks really good. So these are some of the stocks that I probably would be much more interested in overall. You know, LRN would be a good example of that. I think there were some other ones in there as well. But those are kind of the stocks that I would want to do something with. I wouldn't do it today as the stocks are down, but as they're rising in price, taking out previous highs. So as a very basic way to select stocks, let's look at an example and walk through really how to manage that position. So the example I'm going to break down for you today is a trade on EAT Brinker International. Now, let me kind of lay the foundation of why this trade was such a good trade. Well, number one, look at the graph. This is a graph that you look at and say, wow, I want to be a part of this. This thing for the last year has gone from, 30-some dollars a share up to 90. And I know what you might be thinking, but Ron, it's at a 52-week high. We missed it. We didn't miss it. There's still a lot left for this graph to go. That's one thing I learned early on in my career at VectorVest. Don't be afraid of 52-week highs. What goes up still can go up even more. But let's look at some of the other things. Number one, let's look at the fundamentals. The very basic, VectorVest simple, earnings per share. This stock is rising, lower left to upper right, rising earnings. I love it. 52-week high, I love it. 3-month high, I love it. The other thing I like, support and resistance. We have no resistance in sight on this stock. That's another great part. So we've got everything going for us in our favor at this point. So let's break this trade down into how we can really establish a mechanical stop methodology for this. And the whole idea is, first and foremost, we could just use the stop. And the stop in and of itself would work perfectly fine for this trade. In fact, let's go back to that yearly graph, and I'm just going to put the stop on. If we got into this trade back on October 15th, which is what we did, right there. October 15th is right there. And let's just move this graph all the way to the right. Look at that. The stop worked perfectly fine. In fact, you'd still be in the trade. The VectorVest stop price is working very, very effectively. But let's talk about how we can maximize this. Lock profits in a little bit early, keep our stops moving. That way, as the stock starts moving, we can also preserve capital. We don't have to wait for a big sell-off in this thing to finally get out of the trade and watch, 15, 20% of our profits kind of dissipate. So let's go back to the beginning. Here we are on October 15th. October 15th, we buy the stock at $90.08. And what I'm going to do here, I'm just going to make a little line right on this bar right here, just underneath that bar. I want to make sure that I know, for my own sake, that that is the day we bought the stock. Okay? Now, the first thing we do is we place a hard stop. We place this with our broker, and that hard stop is the VectorVest stop price. Okay, we're going to place that right down here. Let me get my date line in here, and we'll just move that right there. Here we are. It's October 15th. The VectorVest stop price is $76.10. We bought it at 90. So what is that, like a $14 stop? All right. Now, what I want to kind of do here is I'm kind of a write it out person. So what I like to do is I like to just kind of write this out. I'm not a PowerPoint guy for the most part. I like to write little notes to myself. So let's do this. We're going to place a hard stop with our broker using the VectorVest stop price. And now we keep that stop price until we hit a trigger. A trigger simply means something that makes us move. Okay? A trigger to move the stop in this case. So what is that trigger? Well, let's kind of keep going through this. I'm just going to kind of ho-hum along. Everything is looking good. Stock's moving up. 52-week high. Another 52-week high is in place. Everything's going along swimmingly. Everything's going along great. Everything's going good. It's going good. It keeps going up. Everything's fine. Our original stop is still intact. We're going up, up, right there. This right here is what I call a trigger bar. And this happens on an earnings day, October 30th. This is a gapping candle up. Now, when the market gaps up like this, here's what we're going to do. We are now going to place what I like to call a mental stop in place. So what we're going to do is I'm going to go ahead and I'm going to take off that date line, and let's add a freehand line, and I'm just going to make a little straight line here. I'm going to go ahead and we're going to make that a dashed line, and I'll make it a little thicker, and we'll make that as a, I don't know, how about a yellow line? This is my mental stop. Okay, so what happens here is I place that mental stop right below the low of that gapping candle. Now, gapping candles, understand, is kind of an artistic thing. You're going to see gaps, like if I go back on this graph, you can say, well, Ron, this thing gapped on that day. Is that really a gap? Or, was this bar right here, was that really a gap? When I look at a gap, I say, wow, that stock gapped. There's a nice big space, okay, between the last close and the open price. You see a big blank space here. Now, what we're going to do, and I'm going to bring over my little notes again, we place a mental stop below the low of the candle. If we take that out, we're going to adjust the hard line stop up to 0.5% below the low. So, if we get a close, okay, below the low of that gapping bar, we are going to move our stop from down here to whatever the low of the bar that closed below that mental stop. Now, something also happened on October 30th that was a trigger point. This was the day that we actually saw a 10% gain in the stock. Remember, we bought the stock at $90. 10% of that's a $9 gain. The stock is trading on that day. Let's go ahead and put our date line back in place here. The stock is now trading for about $105 a share. We have also captured a 10% gain. So what we can also do is, first and foremost, this VectorVest stop can now go away. It's gone. We don't need the VectorVest stop anymore because we're going to be watching two price targets at this point. Using my Fibonacci level, I'm going to take a fib retracement. Now, when I do this, by the way, this is not a real Fibonacci level. I'm just using this to measure a 50% level. I'm going to take and draw from where we entered the trade back here on October 15th, and I'm going to draw a line all the way to the top of that bar right there. Okay? Now, I'm going to go into my Fibonacci, go to Style. Here's what I like to do. This is just me. You can adjust this color any way you like. I'm going to turn off everything except 0, 50%. I like to keep 100 on there because it kind of gives me some lines where my lines are, levels where my lines are drawn. And then what we're going to do is I'm going to take this one, also make it a little thicker, and we'll do a dotted line there, and I'm going to make that color red. Okay, so our new stop is moved. Right now, our stop is going to be placed at that dotted red line. 50% of our gain. We made 10%. We're adjusting our stop up to keep 50% of our profits. Now, you might look at that and say, well, Ron, what about this line again? Well, again, this is our kind of adjustment line. If we get a close below that, we're going to move our hard stop up. But we don't know if we got that yet. So let's move to the next bar. Oops, let me go and click OK here. Let's move to the next bar. All right, we didn't close below that, so that's good. Now we got a new high in place also, so we're going to move our stops up. Next bar, didn't get a new high, didn't get a close below, everything stays the same. Now, we move up. Every time we place a new high, we move our stop up to keep 50% of the profits. Next bar, oh, look at that. That's another big gap up. We can do the same thing. We move up. Now, something else occurs on this day. Okay, so again, we have another adjustment point. On November 6th, we have another gapping candle up. Now, here's the kicker to this, okay? Remember that mental stop that we had down here? That goes away. Why does that go away? That goes away because our 50% stop to keep half of our profits has taken that out. So now we're going to take that mental stop and we're going to move it to that low. That yellow line is the line that I'm watching right now. If we get a close below that yellow line, we're going to move our hard stop up. Next bar comes in. Uh-oh. That's exactly what happened. We have a close below our mental stop line. So now what I need to do, I'm going to take that mental stop from here, I move it 0.5% below the low of that last bar, and if it takes that out, I'm out of this trade. Simple as that. Next bar comes in. Fortunately, we get a reprieve. Market starts going back up again. But do you see how as the market's coming back, we're tightening and we're ratcheting our stops in there? That's what we're doing. And lo and behold, the market continues to move up even more. Now again, as new highs are done, we're going to take that original 50% stop that's holding our profits in, and we're just going to keep kind of keeping that in there. But keep in mind, the real stop for this trade is the yellow line. That yellow line stop stays in place until the 50% stop overtakes it. So keep going up. Not even close. We're looking good. And then we're making new highs again. So let's go ahead and adjust. There we go. We're still not overtaking that stop yet. So we're not using the 50%. We're still using that stop from when we had the gap. Next bar, we're still making new highs. Let's move that up. All right. Now right here, see what happened on, what date is that? That date is November 25th. You know, Ron, you can always use this in the lower right-hand corner. That date's November 25th. On November 25th, the 50%, keeping your gains, right, keeping half of your gains, has overtaken that mental stop. The mental stop goes away. I'm just going to move it back in the upper left-hand corner. I'm probably going to use that line again at some point. I don't want to have to redraw it again. Kind of lazy. You get the idea. All right. Market keeps going up. Everything is looking good. We keep making new highs. Nothing really is coming in that would trigger me to do anything else yet. Keep going. Everything's looking good. Everything's looking good. Maybe getting a little worried, but it doesn't matter. This is a mechanical process. Your stop is in place. You're at the 52-week high. That red line in the sand is your stop. That's all you got to worry about. Keep it going. Everything's looking good until, boom, December 10th. What is December 10th? December 10th is a confirmed call down. The market may spin off from here. We may go down. This is an area where we would like to tighten our stop. In case the overall trend of the market changes here, I want to try to salvage some of my gains. And I don't want to leave it all the way down here. I want to tighten things up. So here's what we're going to do. When we get that confirmed call down, I am going to add a 20-period moving average to my graph. Okay? Now, that 20-period moving average, I'm going to watch for a close below the 20-period moving average. While this market remains in that confirmed call down until we get a next green light, I'm going to watch that 20-period moving average. Okay? We actually went up that day, in fact. Confirmed down, but the stock was actually up and closed above the moving average. All right? So, just kind of keeping pace here. On December 10th, confirmed call down. We add our 20-period moving average. If we close below, adjust the hard stop to a 0.5% below the candle that closed. Why? Because we like to tighten our stops to protect us. That's what it's all about. So, next bar comes in, everything is still looking good. Next bar comes in, we're still above the 20-period moving average. Next bar comes in, we're still above. Remember, we're looking for the closing price. Okay, we're looking for the closing price. Now, I keep saying candles. I actually have the open, high, low, close bars on here, but same idea, right? Candle, gap up bar, you know what I mean. Next bar comes in, everything's looking good. Now, notice we haven't made a 52-week high yet. We're still back here on the 52-week high, so that line in the sand, that hard stop hasn't changed yet. Next bar comes in, next bar comes in, okay? Now, what happened right here on December 18th? We have that close below. Now, do you remember the idea here? We are now going to adjust our hard stop a 0.5% below that bar. Okay? A 0.5% below that bar. So I'm going to grab my little dotted yellow line here, and right below there, this is our new hard stop. Not a mental stop. This is a hard stop. We closed below the 20-period moving average. This is a hard stop. Next bar comes in. Okay, good. We jumped up again. I'm going to adjust my 50% keep profit stop, but knowing that whatever is closest, whatever stop is closest to the price, this is my hard stop right here. Okay? So again, if I kind of keep my drawings going, on December 18th, we closed below, and I could put in the 20 MA. We're going to adjust our hard stop 5% below the low. I make grammar corrections when I can. I saw there wasn't a capital letter there. I feel like I needed to put that there. Okay. Now, we keep going. Everything's looking good. Everything's still looking good. Hard stop in place. Everything is great. Everything's good. In fact, we had another 52-week high. Let me adjust up. Keep going. Everything's looking good. Everything's looking good. Everything's looking good. And another 52-week high. We can adjust that higher. And again, we're just monitoring. Whatever stop is closest, which happens to be this one, is my stop. That's my hard stop in this trade right now. Keep going. Keep going. All right. Something good happened right here on January 6th. We have a green light back in the color guard. That means the market is back in an uptrend. We're going to remove the 20-period moving average, and we're going to go back to quote-unquote our normal stop rules. Okay? Now, even with that 20-period moving average removed, all right, my stop is still right here. That's the closest stop to this market. All right? So we're just going to keep going. Up, up, kind of up, more up, more up, more up. And again, I'll just continue moving my 50% up there as everything happens. Up. Keep it moving. Now, it's up to you. This is one of those artistic things. That's a big move up, but the gap in and of itself wasn't very high, so I'm not too deeply concerned about that. We keep going up. Everything's looking good. We have another 52-week high. Looking good. In fact, we're getting to the point where our 50% stop is taking out our last temporary hard stop. Oh, look at that. Now, big move up. Another earnings move. Guess what? This is now gone. Our 50% stop has moved up and was overtaking that. Now, a couple magical things happen on this day. Number one, it's a gap up, right? That's a gap up. No question about it. That is a gap up. See how the big black space in between the bars? Gap up. So what do? Well, go back to your normal gapping rules. You're going to place a mental stop below the low of that gapping bar. Okay? Now, we're going to keep monitoring things. Another special thing happened this day. You also achieved a 100% profit. The stock has gone from 90 to 180. This is optional, but you can also take off half of your position here if you'd like to. Lock in those profits. You made 100% gain. And then just keep the rest on with the trailing stop as we're talking about. Completely up to you. Okay? But it's a good place at 100% profits to move those stops if you'd like. So again, I'm just kind of keeping track of this. On January 29th, gapping candle up. We're going to place that mental stop below the low of that candle / bar. If we take that out, adjust the hard line stop up to a 0.5% below the low. All right? So next day, things keep going up. Everything's looking good. We're going to keep adjusting that stop up. Now remember, this stop back here, this is the one that's trailing. We're not using that yet. The one that we're still watching is this guy. All right? That's our mental line. If we get a close below that, we still have to keep track of it. And we keep going. Everything's looking good. Going higher. Everything's looking good. Oh, another 52-week high. Everything's looking good. All good. All good. Let me get rid of that. Keep going. Keep going. And boom. Right there. February 10th. We have our close below that gapping bar's low. Now again, we keep this in place, okay, until this red line overtakes it. Well, as you can see, the red line never overtook that. That's still my mental stop. Well, now I need to move that to a 0.5% below that bar. If we are taken out, the trade's off. The very next day, you're done. Not looking for the close. I'm just looking for price to hit that. So that trade is now off the table on February 11th. The last 50% trailing stop didn't matter because whatever stop is closest, that's the one you use. That's where the trade is stopped out. So just to kind of wrap that up, on 129 we had 100% gain. Take off half the position. Optional, I like to do it because locking in profits is always a good thing. On February 10th, we adjust the hard stop to 5% below the low. Why did we do that? Because we took out the low right there. And then finally, on February 11th, we were out of the trade. Okay? That is the entire sequence of running through that. And let me see if I can maybe get this to a little bit lower font right here and put that in there so you guys can kind of see all the steps as I review them. I know that's a little bit small, but you can always pause the video and take a shot of it. This is the process of which we go through things. And like I said, I like to write it down. Keep it written down. Keep track of it. It just makes everything much, much easier. So that is a very methodical, mechanical way to follow a trade. And like I said, this is what we like to do in the Successful Investor. Keep those profits tight, keep things locked in, and try to maximize and move your stops as the market adjusts. That way, we're not waiting for a 25% sell-off to get out of the trade. We're able to maximize and take profits as we go along, keep those stops adjusted to the whims of the market, and ultimately will make you more money in the end. Now, the best part of what I talked about tonight, this is a core of what we teach in our Successful Investor course. And the best part about it is it's free for our members. All you got to do, go out there, go to VectorVest.com/TSIC, get yourself registered. It's a free course. This is the type of material that we teach in there. Very, very useful, very, very free. Our live mastery sessions begin every Wednesday starting on March 5th. Get yourself signed up, learn how to use VectorVest to really maximize your profits. Now, if you're not a VectorVest member, that's okay. All you got to do to watch the course, become a VectorVest member. In fact, you can sign up for our 30-day $9.99 trial offer. You'll become an official VectorVest member, and you can also sign up for the course. Just visit our site, VectorVest.com, and get yourself signed up for that. Again, it's completely free to our VectorVest members. So I want to thank all of you for watching our special presentation tonight. Hope you got some great value out of it. Remember to follow us on social media, stay up to date on VectorVest events, contests, market news, and educational topics. And with that, I will bid you a pleasant good evening. Thanks again, everybody.
Yeah.